Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Just want to pause for an announcement. This Bookmap is offering a chance to earn 3 months of Global Plus for free and also a blue jacket. More about that in just a couple of minutes. I've got the web page up for that, so I'll go over the details in just a moment. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price for many key drivers of price in many stocks and futures. That certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of the index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Monday, October 13th. First of all, I want to go over news items, starting with the big news item from last Friday, how it evolved over the weekend, and then upcoming events, potential data releases later on this week. All right, let's get started. And while we're doing this, I'm going to take a look at the S&P 500 ES futures and Bookmap. All right, so I'm sure everyone is aware, last Friday, right around 11 a.m., President Trump threatened to place tariffs on 100% tariffs on China goods based on their increased restrictions and rare earth minerals. So that was just a threat, and the market dropped substantially. That was right around 11 a.m. Eastern Time, continued to drop throughout the day. And then after the regular trading hours. So SPX was closed, and then Trump followed through with his threat and actually placed the tariffs on China after the SPX had closed, but before the ES futures has closed. So the futures continued to drop until they closed at 5 p.m. Eastern Time. So you'll notice there is quite a difference in the expected moves for ES and SPX today, and that is the reason why the ES continued to move quite lower after the regular trading hours when SPX closed. And then over the weekend, of course, President Trump softened his stance, so kind of another taco trade today. And the market, SPX gapped up and chopped around for about 90 minutes and then rallied. But looks like the biggest move was the just the gap up yesterday and then the grind up. All right, so that's the tariff news. All right, so today the bond market is closed. It's Columbus Day in the U.S. And then also Oracle is having its AI conference beginning today. All right, tomorrow Jerome Powell will be speaking, and I've seen two different times for that, one at 11:30 and one at 12:20. I believe it may be 12:20. Also, banks start to report earnings tomorrow, and J.P. Morgan and Goldman Sachs report earnings before the market opens. And then on Wednesday, normally the CPI data would come out at 8:30 a.m. Eastern Time, and I understand CPI data is coming out, but it may be delayed until next week. So sorry about that. I just don't know. And then more banks report earnings before the market opens. Bank of America, Morgan Stanley, and then ASML, chip equipment maker, reports earnings before the market opens as well. And then normally on Thursday, PPI data and retail sales data would come out, and that probably won't happen. And then also Taiwan Semiconductor reports earnings before the market opens. And then Friday is the options expiration, the monthly options expiration for October. All right, so that's the, and also there are a number of Fed speakers throughout the week. All right, so that's what's going on in the market. And then there's also some stock-specific news, and we'll take a look at that when we get to stocks in just a couple of minutes. All right, so that's the news. And now let's move on to positional analysis. So again, this is the S&P 500, ES Futures, and Bookmap. And I'm looking at mostly regular trading hours here. Note the key support this morning has been around this SPY 660 large gamma 4 level. Before the open and then after the open as well. Again, chop in the morning. And now finally, SPX began to rally just after 11 a.m. So more about that in a few minutes. All right, so before I dive into this chart more, let's step back. Let's take a look at a higher time frame. Let's go to SPX, the underlying index. And as always, I'm going to start with a 1 year, 1 day chart. So the current rally began early in April. And then there have been pullbacks along the way. Pullback right at the end of August, September rally, then a pullback just after September options expiration, shown with that vertical red line there. And then this big bar, that was the Friday response to Trump's tariff threats. And that is the biggest bar since early in April. And again, SPX trying to recover today. All right, so let's pick that up now with a 30-day 1 hour chart so we can get a closer look at current price action. 30-day 1 hour chart. September rally. A little bit of a pullback after September options expiration. And then Wednesday, October 1st, SPX broke above the 6,700 level and then consolidated end of last week and end of the the week before and last week. And then this is again, the reaction last Friday to the Trump's tariff threats. SPX during regular trading hours traded down to around 65.50. And again, S&P 500 ES did trade down lower after the regular trading hours. And now SPX gapped up and trading up toward looks like finding resistance right around the zero gamma level. And then the 6680 volatility trigger is just above. And that is that we'll take a look at the trace gamma heat map in just a couple minutes and see that as the kind of the primary target for today based on the large positive gamma at that level. All right, let's take a look at levels on this chart. And I'm going to start with the expected moves. So now this is again based on the closing price for SPX. ES did continue to move lower after that. So there's quite a difference in the ES and SPX expected moves. So let's take a look at the SPX expected moves here. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from Friday again. And then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX, again from Friday. So the expected moves for the weekly expected moves remain in place for the entire week, and then the daily expected moves change every day. And note the very wide daily expected moves just based on the news Friday and potential for more news over the weekend. All right, so SPX is trading within both of those ranges, but testing the upper limits of the upper daily and weekly expected moves. All right, let's take a look at the spot gamma levels on this chart. These are shown by the dark red lines, and they're based on gamma-weighted open interest. They're provided to Spotgamma subscribers, and I'm going to focus on the key daily levels. First of all, the absolute gamma strike has dropped down to 6,000 now. So that's the strike with largest absolute positive and negative gamma, and it dropped down from 6,700 on Friday to 6,000 today, and for most of the year it has been at 6,000. All right, that's the absolute gamma strike. Next level up is the put wall at 6,500. That's a strike with large net negative gamma that can be expected to act as support. And that level also moved down from Friday. Next level up is the volatility trigger that I mentioned before at 6680. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note that is based on Spotgamma's older total open interest model, and we'll take a look at gamma based on their newer synthetic open interest model in just a minute. And that level also moved down from Friday. So for SPX, the volatility trigger, put wall, and absolute gamma strike all move lower from Friday. Same for SPY. And then the call wall actually moved higher, up to 7,000. That's a strike with large net positive gamma that can be expected to act as resistance. And as far as I can recall, that's the first time that the call wall has been at 7,000. And SPY call wall increased to 700. So for SPY and SPX, the shifts were synchronized. Again, volatility trigger, put wall, absolute gamma strike, lower for both, and call wall higher for both. So quite a range there of the 6,000 absolute gamma strike on the downside and the call wall at 7,000 on the upside. All right, let's wrap up our review of SPX with a 1-minute chart. SPX 1-minute chart. Remember I mentioned the consolidation last week. with 6,700 as support. All right, let's zoom in so that was the important level. And then on Friday, maybe zoom in on this just a little bit. Friday, SPX broke down below that 6,700 level, pulled back, came up, tested that level, and then dropped down all the way to 6,550 at the regular trading hours close, and then gapped up today, and then kind of a grind up. Not a real strong market today. So again, most of the movement was the gap up yesterday and then the overnight trading. And then here's the 6680 level that I mentioned before. And earlier today, that was looking like a potential target based on the positive gamma at that level. We'll take a look at that in just a couple of minutes. All right, that's up our view of the underlying indexes with SPY. Zoom in on this so you can see the big drop on Friday. Then gap up. And then a grind up. And support at the 660 large gamma 4 level after the open. Then here's the SPY volatility trigger, 662. All right, that's SPY. Let's go back to Bookmap now. All right, so again, remember I mentioned this 660 large gamma 4 level. And around that level has acted as support. All right, so that's the main level. And again, ES trading up above its upper daily and weekly expected moves based on that sharp drop on Friday. There's the upper daily expected move, and then the dashed purple line right around 66.50 is the upper weekly expected move for SPX. So note earlier, around that level acted as resistance, and then support. So we see what happens now when SPX ES is down near that upper weekly expected move as well as the SPX 66.50 level. And again, remember that was the it was the 65.50. Yep. So that's 100 points higher than the low on Friday. All right, so and we'll take a look at setups in just a couple minutes. All right, let's take a look at NASDAQ. Any questions about the S&P 500? All right, let's take a look at NASDAQ. Similar picture, chop in the morning and then kind of resolved higher just after 11 a.m. So let's take a look at the underlying index charts. And by the way, for the S&P 500, there is a difference in price between ES and SPX. And today that offset is right around, it's between 41 and 42 points. So right now I'm using 42. Maybe 41 and a half would be a little bit more appropriate. But I'm showing SPX 66.50. Oops. Yeah, SPX 66.50 at ES 66.92 to account for that 42-point offset. And I do post the index relationships that I use every day in Discord. All right, let's take a look at the underlying index charts for NASDAQ. We'll start with QQQ. See if there are any levels in play. All right, just like the S&P 500, a big gap up on Sunday evening, and then pretty much chop after that, trading at a narrow range. And the only Spotgamma level in play is the 600 volatility trigger. All right, for QQQ, The volatility trigger and absolute gamma strike shifted lower, and the call wall shifted higher. So the same QQQ, the same as SPY. Volatility, except for the put wall, remained in place at 590. All right, so then let's take a look now at NDX. And note all the gamma levels did shift pretty substantially lower, and now the only spot gamma level up above is the 25,200 large gamma 4 level. And then earlier today, there was a combo level that acted as support. Let's zoom in on this. Let's see if we can get a closer look at that. So that was this combo level, combo 2, at 24,537. And NDX reversed higher this morning just after the open, just above that level. So let's go back to Bookmap now so you can see that. There's that combo level. And then this would be this blue line here, dash blue line, upper daily expected move for NQ. Then I believe this is the upper weekly expected move, the dash purple line. And it looks like, although NASDAQ is chopped around, it is making a series of higher highs with some deep pullbacks along the way. All right, so that's NASDAQ. And then there's that 600, QQQ 600 level that I mentioned before. Large gamma 2 volatility trigger. And again, we'll take a look at setups in just a couple of minutes. So let's wrap up our positional analysis before we do that by taking a look at gamma. And I'm going to start with, I used to look at this I do look at it every day, but I used to present it in every webinar. Let's go back and take a look. So this is based on Spotgamma's older total interest model, but this is gamma notional market maker's position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. And I wanted to cover this because it is so extremely negative. And note, for SPY especially, market maker's position on the gamma curve at the beginning of the day, quite negative at minus 2 billion. And give me just a moment. I need to take care of something in Discord here. Okay, sorry about that. All right, so that's the gamma notional at the beginning of the day. Now let's take a look at a picture of gamma notional based on their newer synthetic open interest model. This is the Spotgamma trace gamma heat map. There's that 6680 level that I mentioned before, and that is still a 99 percentile strike, but it was much larger. You can see based on this wick here that the gamma notional has been much stronger earlier in the day. So let's step back in time. Let's take a look at what the gamma picture looked like just after the open for SPX. So I'm going back to 940. Let's step through time. You can see the gamma notional, this GEX bar here building at 6680. So this is market maker's position. So they're positive gamma, so that means that traders are negative gamma, and they're short a 6680, 6685 call spread. All right, let's step through time. And this is showing that SPX is trading in a pocket of slightly positive gamma with red shading negative gamma up above and below. So remember, positive gamma, remember the chop this morning. Market makers are trading against price dash their delta exposure, and that tends to subdue volatility. So we're looking at, again, positive gamma, lower volatility in the morning, and that's pretty much exactly what happened. Big swings up and down and then continue to step through time. Note the positive gamma at the 6680 level builds back up, then starts to diminish again. All right, so now as price moves lower, that positive gamma at the 6680 level has diminished, but still SPX trading in a pocket of positive gamma with negative gamma up above and below. All right, so let's move on. Let's take a look at some setups now. And I'm going to start with the S&P 500. And as always, I'm going to take a look and see what options traders have been doing today. I'm going to do that with a hero signal. So the levels that we've looked at and the gamma notional at the beginning of the day, that was based on static data that's updated once a day. And then trace is updated every 10 minutes. And now we're moving on to real-time data. This is the hero signal, hedging impact real-time options. It's showing options trades and market maker hedging activity in real time for the S&P 500 index components. We've already talked about two of those, SPX and SPY. This also includes ES and XSP. So this is showing options trades and market maker hedging activity for those index components, those four index components. So the white line is price for SPX, and the purple line is the hero signal, and it's showing calls and puts. So it's been pretty choppy today, but grinding with a bias to the upside. So let's take a look now at some setups. So again, with a grinding move higher, bias to the upside. Not a lot of clue here. Looks like the options traders are falling price. Then a little bit of a lead there, and then in sync with price. All right, there's another hero signal that we can take a look at. That's the equity signal. And before I do that, I'm going to shift to puts and calls. All right, so traders, the orange line shows calls, the blue line shows puts. Direction of the lines indicates options delta. Sorry about that. I'm going to jump back. All right, so rising lines indicate traders are taking positive delta options positions. In this case, they are buying calls and selling puts, and that was going on until about just after 1 p.m. Eastern Time when these peak patterns form. But overall, trending higher, and the thing to do today was to be patient and wait for long setups, deep pullbacks for long setups. All right, let's take a look at the other hero signal available for the S&P 500. That's the S&P 500 equity signal. So this is showing options trades and market maker hedging activity for the 500 stocks in the S&P 500 index. So again, the white line is price, and the orange and blue lines are showing calls and puts for the S&P 500 and stocks. So this also has a positive bias for calls, but traders are buying puts. So in the equities, they're buying calls and buying puts. That's shown by the negative delta notional over here. All right, so let's go back to the S&P 500 index component. I'm going to combine this again. I'm going to have to jump back, just to compare. So note the total delta notional here is about 3.85 billion. And compare that with last Friday, which was a record for Hero, I believe, according to the Founders Note, AM Founders Note, at minus 19 billion delta notional. That is just huge. It was a very, very bearish day on Friday. And traders taking advantage of maybe an overbought market and running for the exits. All right, so anyway, let's take a look at some setups. So we have a positive bias today. Let's go back to the S&P 500. So we'll take a look at Bookmap. So Bookmap, again, remember the 660 level acted as support before the open, again after the open. So there's your first long setup, second long, third long, and the first and second, actually the third was the best setup. That's when the hero signal had really started to move higher. And then if you were patient, this is the best setup. And you can see the order flow on Bookmap here, the shift. The volume dots of Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. And green volume dots indicate more buyers than sellers. And the shift here is most clear right at the 660 level. And you can see the bump up in cumulative volume delta, that dark blue line. And then as price starts to move higher, buy stop orders also help to fuel that move higher. So let's go back. Let's take a look at Hero now. And by the way, there's some much better setups and stocks. I'll get to those in just a minute. All right, so let's go back, take a look at Hero. So Hero is making slightly higher lows as SPX came back and tested this level for the third time just after 11 a.m. And that's when price really got moving higher. All right, back to puts and calls. So you can see the call buyers come in. And price moves higher. That's when some put sellers come in also. Sorry about that. Gonna have to jump back. All right, so net overall, traders are buying calls, selling puts. Let's take a look at the equity signal. And then this is when the equity signal really took off, just after 11 a.m. Put and call line had been pretty flat until that time. Then traders started aggressively buying calls. And then that's when the best setup, the best long setup, just after 11 a.m. All right, so that's the S&P 500. Let's take a look at NASDAQ. So just like the S&P 500, there are two signals that we can take a look at. For the NASDAQ, that is the NASDAQ index signal. Also choppy today. And NASDAQ a little bit more bullish right at the open. So this is showing options trades and market maker hedging activity for the NASDAQ index components that we've already taken a look at, QQQ and NDX. So the rising hero signal, the purple line, indicates traders are buying calls in those index components and buying calls and or selling puts. Market makers take the opposite side of those trades, and they have to buy NQ futures to hedge their delta exposure. So bullish opening drive, peak pattern, pull back, the bullish segment. So the best signal was this initial opening drive. Let's take a look at the other hero signal available for the NASDAQ. That's the MAG 7 signal, and pretty choppy today. All right, so let's go to Bookmap. Take a look at NASDAQ. All right, so there's that bullish opening drive. Good for about 150 points in NASDAQ. And then the final pullback and move higher just after 11 a.m. And note the subchart here showing large traders were buying that move. So they were fading this move down You can see all the magenta volume dots right after the open. They were fading that move. That's one clear signal to look for a long setup. Price reversed of above 750 in the 598 QQQ 598 level as the NASDAQ index hero signal moved sharply higher, and then chop, and then a pullback again at 11 a.m. and that's when traders started buying calls in the Mag 7 stocks. Yellow line showing buy stop orders fueling that move higher, and then cumulative volume delta comes in a while later. All right, so NASDAQ trading close to highs of the day. All right, any questions about the indexes? All right, let's take a look at some stocks. And I'm going to actually bypass the Mag 7. There's much more interesting setups and some other stocks that I do follow. First, AMD. So remember the big move up in AMD after the OpenAI announcement. And then looks like traders are taking profits today. So let's see what options traders have been doing in AMD. I'm going to shift to puts and calls. Go to AMD. Much more clear here. This is a very nice divergent short setup. So this is showing that traders, there was maybe a brief moment. Traders are buying calls at the open, and that only lasted for a very short time. Then traders started selling calls. They continued to sell calls. Price moved up, setting up a very nice divergent short. Hero signal moving down. Price moves up, reverses lower as traders continue to sell calls. And AMD moves lower. Very nice divergent short setup. And then AMD consolidated when the call sellers took their foot off the gas. And now it looks like some call sellers have come back in, and AMD moved down a little bit lower. Also now they are buying puts. So they're buying puts and selling calls in AMD. All right, so that's AMD. Let's go to Bookmap. So here's that divergent short setup. Reversal right at 224. Sean, welcome. Glad you're here. Thank you. Sean says great content. Thank you. Thank you for your kind words. All right, so very nice divergent short setup. So there was that very brief bullish opening drive, bullish opening print, nice divergent short setup, good for about 7 points, straight down. All right, so that's AMD, traders taking profits and maybe reacting to Broadcom news. So another day, another open AI deal. NVIDIA, Oracle, AMD, Broadcom now. I think this may be the second Broadcom deal with OpenAI. Hard to keep track. Not sure where OpenAI is getting all the money. But anyway, it is what it is. Traders reacting positively to that news. So here's when the news came out, just at 9 a.m. And Broadcom jumped up 35 points. Let's zoom in a little bit at this so we can get more of the price action in regular trading hours. Let's see what options traders are doing in Broadcom. And MZ Dye, welcome, glad you're here. Ask, is CVD on stocks accurate? Yes, it is. A couple things to keep in mind. We'll take a look at Broadcom in just a couple of minutes. So sometimes CVD can be misleading, especially in stocks. And I'll talk about that in just a minute. So let's take a look at the hero signal first. So there was a little bit of a pullback at the open, reversal at the 350 call wall. Traders were buying puts. They stopped buying puts. And then they started aggressively buying calls. That was right around 940. And that's when Broadcom reversed higher. So traders stopped buying puts. They actually started selling puts, aggressively buying calls, and price jumped right up. And then as the hero signal started to flatten out, that's when Broadcom began to consolidate. So sharp move down, sharp move up, and then consolidation after that. And of course, the big move was before the cash open, right when the news came out. So let's go back to Broadcom. So in this case, MZDI looks like CVD is correct. Cumulative volume delta agreeing with price, and you can see mostly green volume dots. So traders are buying Broadcom stock. There's the reversal at 345, and then a breach of the 350 call wall. Then again, remember, call buyers finally took the foot off the gas. So the main targets, looks like that's 357.50. I'm looking at the liquidity, the history of the limit orders in the order book, mainly stacked up at the zeros and the fives. 360, 365, 370. And again, remember, around 370 was the opening, the pre-market high, a little bit higher than 370. All right, so there's Broadcom. Bullish day, another OpenAI deal. All right, let's take a look at a couple of other stocks. Robinhood, bearish day today, now trying to recover. Let's see what options traders are doing. All right, Robinhood, this is a bearish opening drive. Traders selling calls. Robinhood moves lower. Traders sell calls. Market makers buy the calls. And they have to sell stock to hedge their delta exposure. So they were aggressively selling calls until about 10:15, 10:10, 10:05, something like that. They slowed down a little bit. Then they started buying calls right around 11:40. And now Robinhood trying to recover. So call sellers and call buyers driving price to date. Note 138 is the hedge wall. Price did breach down below that level, but now trading back above. One other thing about CVD in Bookmap, the stocks data is coming from DXFeed, which includes EDGX and NASDAQ, those two exchanges, but it does not include other exchanges like the New York Stock Exchange. So it is good data, but it's not complete. So that's another thing to keep in mind. All right, so that's Robinhood, bearish day. Bearish opening drive, and then call sellers start to take the foot off the gas, start buying calls. Now, Robinhood back up above the 138 hedge wall, trying to recover. And it looks like Robinhood met some sellers just below 141. All right, back to Hero. So it looks like the call buyers may have taken their foot off the gas. Let's take a look at Palantir. All right, pretty choppy day on Palantir. Let's zoom in on this so we can see the the morning price action. So this is another bearish opening drive, nice bearish divergent setup. Traders selling calls from the open. Note they continue to sell calls as price moved up, setting up this divergent short just after 10. So let's go take a look at Bookmap. Palantir. So here's your very fast, bullish, a bearish opening drive. Then there's that pullback right up to 178. Nice short divergent setup. Down to 174. And now Palantir trying to recover. So it looks like traders may be taking some profits in stocks that have done well in the last few weeks or month, and then still piling into AI and AI infrastructure. So let's take a look at a couple of AI infrastructure stocks. Let's start with Oracle. And again, remember Oracle recently announced a deal with OpenAI, actually at their earnings, and expected, I think, $500 billion in revenue over the next few years. So let's see what options traders have been doing. Go to Oracle. And this is very clear. Zoom in on this just a little bit. Call buyers come in right around 9:45. Look like they may be chasing price a little bit. So it looks like price started to move higher. Oops. So the key here was the support at the 300 key gamma strike. So Oracle found support, 300 key gamma strike, and started to move higher. Then call buyers joined in. Doesn't really matter. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. And that continued for about 15 minutes. When the call buyers slowed down, Oracle consolidated, still grinding higher, as the call buyers are still buying calls. Traders still buying calls, but not at the rapid pace that they were from 9:45 to 10 a.m. All right, so that's Oracle. So there's that pullback right there, the 300 key gamma strike, and that was your entry point for long. And then some deep entry points for long, deep pullbacks. Let's take a look at an indicator that's available, Bookmap, that can really help to pinpoint those deeper pullbacks for entries in a trend. There's Oracle. It'll take a moment for that to load. All right, MZ Dye asked, should we start calculating CVD from zero at the open or start calculating it from pre-market? I just leave it alone, and let's open up, add another couple of hours of data. So DXFeed starts to provide data at 4 a.m. Eastern Time. So it'll take a moment for that data to load. So it's not really significant until the cash open. All right, so it's loaded now. So I'll turn off market pulse in just a minute. So normally I go back so you can see DX feed starts to provide data at 4 a.m. Eastern time. Cumulative volume delta is pretty flat until 9:30 cash open. All right, let's zoom back in. So if you're looking for deeper pullbacks, first right here, and sometimes it can be a little bit misleading, but there's your deep pullback entry, and you can see market pulse price change extreme already moving higher. This price was moving lower, setting up that long entry, and then multiple signals here, but then finally starts to move higher with a test of VWAP. There's your next long entry. All right, let's turn that off. We'll go back to cumulative volume delta. Slow to Stroke, welcome, glad you're here. And Slow to Stroke asks, what's the name of the pullback indicator? All right, so this is the market pulse price change. I use market pulse price change, but there are multiple algorithms available. So if you subscribe to Bookmap, the market pulse price change indicator is free. And then beyond that, if you want any of these other algorithms, there are quite a few here, you have to subscribe to either the MBO bundle, and you would subscribe to that if you trade futures. If not, you can just subscribe to Market Pulse if you want the additional algorithms. I just use price change, and I think it provides what I need. And again, I use that as a confirmation of a deeper pullback for an entry in a trend. All right, so that's Oracle. And again, AI infrastructure trade. Here's another one, VRT, not well known, but this has been a very strong stock this year. Not as liquid as some of the other stocks that I trade, but it is AI infrastructure. I think primarily provides cooling for AI data centers. So let's see what options traders have been doing in VRT. Vertiv Holdings. All right, so bullish opening drive, call buyers driving price higher. Take the foot off the gas. Come back in. More call buyers after launch. Looks like an institutional block order there, that large vertical line. Large block order buying calls. And now they've taken the foot off the gas after that block order. And VRT consolidating. All right, so far today, the AI play primarily Broadcom, Oracle, VRT moving higher, and then traders taking profits in AMD, and then Robinhood and Palantir moving lower. Bearish setups in the morning. All right, let's go back. Let's check on the indexes now. Unless anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to take a look at any stocks you want me to take a look at. All right, so S&P 500 continues to grind higher. The S&P 500 index signal has now turned higher. Let's go back to Bookmap. Go back to ES. All right, ES back to the 663 zero gamma level. Check NASDAQ. And Marge asked, can you explain exactly what's going on in that hero chart? What's the price, the call line, etc.? What's each line? All right, so let's go back. Go back to hero. All right, so hero is hedging impact real-time options. I'm going to have to jump to avoid the auto zoom, jump back. All right, so this is available to Spotgamma subscribers. It is the hero signal again, HIRO, Hedging Impact Real-Time Options. So this is the S&P 500 index signal. The white line is price for SPX, the underlying index, and the orange line is showing calls. And a rising orange line indicates traders are buying calls in those underlying index components that I talked about. So when traders buy calls, market makers sell the calls, and in this case, they have to buy ES futures to hedge their delta exposure. And the directional line indicates options delta. So a rising orange line indicates traders are buying calls. That's positive delta. The blue line shows puts. And again, the directional line indicates options delta. So a rising blue line indicates traders are selling puts. That is also positive delta. And then so we can look at patterns in this chart, the hero signal. Like here's a call peak pattern, and that's typically a call reversal pattern. And then also bullish momentum. Good example there with the call line and the put line moving in the same direction. So traders buying calls and selling puts, and price moves higher. All right, usually stocks are a little bit simpler to look at. Let's go back to Broadcom. So this is a very typical pattern, and traders are buying calls a little bit slowly up until about 9:45. Started aggressively buying calls, so a little bit of a delayed bullish opening drive, but traders buy calls, market makers sell the calls, and they have to buy stock that hedges their delta exposure. So they aggressively buy calls for about 30 minutes, take the foot off the gas, and price consolidates. All right, Marge, I hope that makes sense. And then the purple line just combines puts and calls into one signal. And I do look at both. I shift in between puts and calls and then the total signal. And always during the morning, I always start with the total signal. That's the purple line. Then to add a little bit of complexity to that, this is showing all expirations, the purple line. We can look at the 0 DTE options trades for the S&P 500. So this would be 0 DTE. It's really next expiration. But for the S&P 500, which has all these index components, have options that expire every day. So this is 0 DTE. So the teal line is the 0 DTE options, and the purple line is all options. So this is showing that maybe around half of the options trades today, the options delta notional is 0 DTE, and the other half is all expiration. So that's options that expire today, tomorrow, the end of the week, next month, next year. And it's mostly, probably not much next year, but mostly pretty close to current date expirations. All right, so that's 0 DTE. Marge, I hope that makes sense. If not, let me know. And if you join Bookmap Discord, you can ask a question there, and I will have more time to answer it. All right, so it looks like the hero signal is jumping up pretty sharply. So let's go back to Bookmap. And now S&P 500 up back toward the highs of the day. Let's check trace and see what that, how the gamma is looking at that 6680 level. The volatility trigger and that positive down level. Let's go back to trace. So that now it's not a 99 percentile strike so far. So that gamma at that level has diminished. But SPX in a looks like a little bit of pocket of positive gamma, the blue shading, with red shading, negative gamma above and below. Hello, Amir. Welcome. Glad you're here. Amir asked, does zero gamma change during the session? Well, so I'm sure these levels change during the session, but they're based on gamma-weighted open interest. That open interest data is only available at the end of the day. And so Spotgamma takes that information overnight and then comes up with the new levels every day. And that's available at the beginning of the day. So the levels, of course, probably do change during the day, but that information is not available until tomorrow morning. Now that's where Trace comes in, and this is based on their synthetic open interest model, which is updated all during the day. So Trace is updated every 10 minutes. So if you want to see the current picture of gamma, this is what you would look at. So this is updated during the day, whereas the key daily levels and zero gamma level, those are only updated once a day in the morning based on open interest that is provided overnight. All right, hero signal ticking higher. Back to Bookmap, and S&P 500 also moving higher. All right, last call for questions, stocks. All right, remember bank earnings start tomorrow morning. Jerome Powell speaking sometime tomorrow, either 11:30 or 12:20. You might check with your whatever news feed you take a look at. And then CPI data, maybe Wednesday, most likely delayed a week, but that data will be coming out. And then we'll talk about what's been happening on Wednesday. So everyone, thank you very much for watching. Thanks for your questions and comments. And I will see you on Wednesday. Thanks again. Bye.